Hey everyone, Justin Jesse Klein here, Klein Real Estate Team, and today 50 bips, not 75, 50.
Yeah, that's right. So big surprise here. Justin and I actually stayed up late last night filming a 75 bips video because we were so confident it was going to be 75 bips. Tiff Macklem just blindsided us this morning. We woke up all early, ready to upload it, hit that YouTube search algorithm first and just get all those views. Here we are refilming, so that sucks. Yeah, no, definitely a surprise. The U.S. was factoring in a 99.7% chance yesterday for the U.S. Fed that their next raise would be 75 bips. Yeah. So Canada, we've been moving in lockstep with the Fed. It was going to be, it was going to be pretty similar. No, now we're 50 bips. So the U.S. is now at 92.5% chance of 75 bips for the next. So that dropped a little bit after today, but this is probably where we break lockstep with them. They're probably going to keep going higher than us now. And typically we do finish our rate hike cycles throughout history about 75 bips below the U.S. Yeah. So it checks out. So yes, we're going to talk a little bit about how high we think this is going to go and implications for real buyers and owners out there in the market right now. Josh, why don't you tell us a little bit about what's happening with mortgages, how this affects people?
Yeah, so fixed is probably going to stay about the same. If you can go with a credit union, and you can get a mortgage at 4.59%. One of our clients just did that the other day. So from a qualification standpoint, that's only 12% more. Your mortgage qualification is only 12% more than it was a year ago when you were getting rates at 1.2%. So you're not qualifying.
So your mortgage loan that the bank's giving is actually 12% less than last year. Yeah. So it's like 500 you get last year on the stress test. This year you're getting like 440. Yeah. So it's only that's why condo prices are only down like 10 to 15% because those mortgage amounts are only down like 12% compared to last year. Because the stress test rate went from 5.2 to 6.59 on a 4.59 rate. So that's interesting. Variable rates, looking at mid fives for stuff that's over 20% down, and then high fours for less than 20% down.
Yeah, so you can either lock in at a 14-year high for 5-year fix, or go variable and ride these rates down, right? Which might sound a little more attractive.
Yeah, or go with a 2-year fixed, and you pay the high rate for 2 years. You kind of cap your downside with the bank kind of continue to raise, and then they're saying 2024 they expect to start cutting into 2025 as well. Probably a little bit slower as their forecast, just kind of a slow move down. So we'll see what happens there, but that's probably our advice.
Yeah,
sales are still down 50%. Market's still a little bit of carnage going on out there in sales volumes, but prices have been holding for a couple months now for the most part in most areas, except for, some areas like Willoughby, Langley, townhouse prices went down like 150K in the last 3 months. It's weird. You just get these pockets, but they hadn't gone down that much up until August. They were holding and then they just slid. So market moves in waves through different areas price-wise. We're definitely seeing the assignment market's a little bit messy. Justin, you've been helping a client look in there. Why don't you tell us a little bit about that?
Yeah. It's there's one complex even that I'm looking at that people pre-bought them back in November, and now they're under what they actually bought them for. For the most part, we don't foresee that we're going to be seeing many of these distressed sales till later next year. Prices are still 10-20% above what people were buying them for when they pre-sold.
Yeah, but townhouses, they tend to complete a little bit sooner, like maybe a 9 or 12-month construction timeline. So those pre-construction townhouses that people bought late last year at super high prices, those are coming up for completion now, and there's definitely opportunities to pick those up from people who can't complete, because private mortgages are like 12% now, so it doesn't make any sense.
Yeah.
HELOCs are at like 6.5%, so those are super high. Private's like 12%. So how high are we going to go here? Well, we're still pricing in like 5% policy rate for the USA. Their mortgages are at like 7.3% already, which is crazy. But their policy rate is projected to stop at 5%. Like we said, we historically stopped like 75 bips before the US. Now we're at 3.75, so maybe the US goes up to 5. They're at like 3 right now, 3.25 right now. So they got another 175 to go. We're at 3.75. Maybe we do another 25. Maybe we get to 4.25. Tiff wasn't super clear on this. He's kind of saying it's going to be a stop and go. Hey, let's see what happens with inflation over the next few months. And if it's, if we can't get core down, which they haven't really yet. And he was saying this, a few weeks ago in Halifax, the Tiff Macklem of 3 weeks ago is very different than the Tiff Macklem of today. 3 weeks ago, he's like, we must get price stability. Like, we will stop at nothing. It is our mandate. Then today he's like, we got to balance price stability and we got to balance the economy. And so it kind of changes tune a bit. It's kind of interesting. He did say today, he said, they kind of put together this forecast where they think GDP growth is going to be 0 for the next few quarters, maybe up a little bit, maybe down a little bit, but pretty much 0. And that's where they're like, okay, if we can get this down to 0, hopefully, we get some more supply in our goods and our services and our jobs, and that'll slow inflation. So that's kind of what they're looking at now. We'll see what happens. He did say they don't expect a severe decline in GDP, which is great. I mean, but Tiff Macklem says a lot of things, so who knows what's going to happen. But that would mean that we're not going to hit a big recession, right? It's just going to be a little pullback. So we'll see what happens. Who knows?
Yeah, we'll see. It'll be interesting. Play it as it goes.
Yeah, so maybe another 25 from here, but totally depends on inflation. And trigger rates. I mean, lots of people hitting their trigger rates today for sure. Didn't turn out to be that big of a deal. Everybody was talking about it. But really, it's bank to bank. But really what happens is, if you're on your variable rate and your payment's still the same, you got to remember these people take out mortgages like 2.5%, 3%. Okay, now, you're hitting your trigger rate. But you're stress tested at 5.25 and your mortgage payment has barely budged. Like it's just that it's all interest now. So, okay, so now they want you to top it up an extra few $100 a month. Well, you were stress tested at probably like $1,500 higher than what your payment actually is. They're asking for an extra few $100. Everybody can do that. So trigger rates turned out not to be that big of a deal. So anyways, that's where we are right now. Anything else you want to add to that, Justin?
I don't think so, no.
Great. Okay. Well, it was, good chatting, and see you guys next time.